Hello guys, this is Dollar here. So I'm gonna be doing a full breakdown on US dollar JPY. So looking at US dollar JPY from the monthly time frame, what we can be able to see it is that we have a market that's actually retesting on the previous support, actually going to the upside, continue the direction going to the upside. So basically, if you can look at this was an impulsive move and then weighted adjustment. So basically, we're just expecting on the on the market to actually continue going to the upside. Remember, after an impulsive move, is going to be a retracement, and then we're going to see the market actually continue going to the upside. So how do you measure the retracement? So the way we actually measure the retracement is actually done in a manner of which it allows us to actually do it. It allows us to actually measure the retracement so that we can actually find some perfect entries with it. What do I mean by that? What I mean by that, it is that when the market actually goes to the upside with an impulsive move going to the upside. So impulsive move going to the upside, if like you want to measure the retracement on where it's actually going to turn, is it going to turn there? Is it going to turn there? Or is it going to turn there? How do you do that? What you do is after the impulsive move and the market actually starting to show signs of actually coming down, what you do is actually you can just use your Fibonacci, measure from the impulsive move all the way to where the impulsive move actually ends. And then you're going to have your 0.382 and 0.50. So basically this area here, that's where the market usually turns the most, 0.50, between the 0.382 and the 0.50 level. So basically we normally expect the market to actually come back to this zone before the market actually continues going to the upside. So let's look at what actually happened. Okay, let's look at what actually happened with the Euro USD, US dollar JPY, sorry. So looking on the US dollar JPY, you can see from here that we had this impulsive move going to the upside. So we're just going to measure the retracement. Measuring the retracement is actually going to give us that area that I was actually talking about. Okay. So in this case, we never saw the market actually retesting on the 0.8 and the 0.50. It went all the way to the 0.60 level, of which the 0.60, this is what we call the golden zone on the Fibonacci. So we saw the market actually turning on the 0.618 level, of which it was a very strong area of retracement. So hence we actually saw the market actually retesting going to the upside. So what we're gonna do, what we can be able to notice from this is that right now on the monthly time frame, we have this area of strong resistance there, of which right now it is just being created. That's where the market actually turned previously. And then looking at the area of strong support on the monthly time frame, we can consider this area as an area of strong support because previously the market actually rejected there before it actually went to the upside. Okay. Previously, we saw the market actually rejecting there, actually coming down a bit, and then finding some momentum there before it actually went to the upside. And right now, we just saw the market actually again coming back to that area. So we can consider that area as an area of strong support. So we're gonna go down to the weekly time frame. Going down into the weekly time frame, everything that I've just said on previously is actually coming into play right now. So basically, that's what we have. We have our strong resistance area there. That's where the market actually turned before actually coming back for the retracement. And also have this area of strong support here, of which right now is actually supporting the market to the upside. So what I'm going to be doing here, just going to be using my lines to actually draw my lines everywhere where this thing actually turned, so that I can be able to figure out where the market is actually going next. Because what I can notice is that the market is already now looking forward to actually going to the upside. So looking further into whatever that actually happened, what you can notice from this area, it is that this area here, previously the market actually turned and then went to the upside, and previously it was acting as a resistance, came back to act as a support. The market went to the upside, acted as a support again, acted as a resistance again. So right now the market actually is acting as a support to that area again there. For those who actually know how to use the head and shoulder, you guys can probably call this the left shoulder, the head, and the right shoulder. So the market right now, it is just bounced on the right shoulder of the head and shoulder, and it's actually looking forward to actually going to the upside. So this area here, it was an area of strong interest here. The hence we saw the market actually coming back to a retest there before it can actually go to the upside. Of which previously I had made a video on how the market would normally see US dollar JPY to turn there and actually look forward to actually printing those high highs going to the upside. Of which that's what we exactly saw. So looking at this area here as well, it's an area of strong zone. It's a strong zone here. The market previously acted so many times on that area there. Because like if you can look clearly on it, you can see that previously it was a resistance, came back to act as a support, and acted as a resistance twice. So basically, there's an area of strong resistance as well. So right now, what you're just gonna be doing, just gonna be and looking forward. If you can just look at this, we can see that the market from a strong area of strong interest, it has just printed an overextended W pattern there. And what you can expect from that, it is that, as all guys know, after the market actually prints a double pattern and actually breaks the neckline, expect a retest to the neckline before continuation. Even if like it's not a retest to the neckline, but then what you can normally expect after a double pattern is actually neckline is actually broken. You can measure with a Fibonacci on this impulsive move and get the 0.32 and the 0.50 level, and know that when it comes back to retest, that's where it's actually going to find that momentum to actually continue going to the upside. So right now we're just going to move on to the weekly time frame, to the daily time frame, sorry. Moving on to the daily time frame, what you can be able to see is that the market actually has broken this counter trend, of which that was the trend line that when the market was actually going and actually resisting, going to the downwards. That was the trend line that the market was actually respecting. So what you can be able to notice there, it is that the market has actually broken above that area to show that the market is still looking forward to actually printing those highs going to the upside. So now we're just going to be looking at the horizontal structure from the daily time frame. So looking at the horizontal structure from the daily time frame, what you can be able to understand is that the market, before it actually broke above this area, it had this area here, of which it was an area of strong. It was an area of strong resistance. Let me just show you guys. If you can look at it, this was an area here. The market actually acted on it so many times. So previously it was support, 10 resistance, resistance, support, resistance, 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 and up until the market actually finally broke above that area. So basically, if you can just move this thing to our right, we can be able to see whatever I'm actually talking about. So previously this area here was acting as a resistance. If you can look at it clearly, you can see that the market actually was resisting on that area, resisting on that area. So right now, since the market has actually finally broken above the area, this now area is now supporting the market to the upside. So we'll be looking forward to actually taking more buys here, of which I've already sent a signal on my Telegram group that we're going to be looking at those buys actually going to the upside. Okay. So looking at it from an H4 perspective, what can we be able to see? Looking at it from an H4 perspective, what can we be able to see? So looking at on H4 perspective, what we can be able to see, it is that the market right now. Okay, let me just put this down a bit. Okay. So whatever that I've actually been saying about the support and resistance, it has actually been acting up on play. You can see that the market actually, this was a resistance, resistance, resistance. Now it is now acting as a support. So basically the market is actually going to continue going to the upside. And if you can look at it going into the weekly again, this area here is an area of strong interest. Market never went much deeper into this area to create a right shoulder. So basically we'll normally see the market actually going back to that area again. So basically here it's going to be a nice entry. For those who actually haven't entered this trade, it's going to be a nice entry there. You can enter this trade as it is, because it is now just printed a bullish engulfing candle, and then just stop loss slightly below 100 pips stop loss, and then you go up with it. So your risk reward ratio can be around 1:3, of which is a very nice risk reward ratio, 3.5, 3.7 actually, close to being 4. It's a good nice to risk to reward ratio. It's going to benefit you around 370 pips. It's going to be a nice buy to actually continue going to the upside. So you guys should be looking forward into this. And then as well, if you can just look at it, what you can be able to do as a trader, because right now you see that the market is actually going. I've actually discussed this on my previous video. The market is now creating all those higher highs and higher lows. Okay, what you can also do as a trader in this case, you can use your counter trend line. What's a counter trend line? A counter trend line is a trend line that I actually draw on a retracement, and once the market actually breaks above that area, and then you know that the market is actually going to continue going to the upside. So in this case, this is going to be our counter trend line. If you go to H1, you'll get to see that a counter trend line was actually in place, and so that slight move coming to the downwards. But then one thing that you can actually guarantee it is that once the market actually breaks this counter trend line, remember right now we're taking a one buy. Once the market actually breaks this counter trend line, you're just gonna see the market actually pushing all the way to the upside. So right now we're gonna be looking at our commitment of traders and the order flow to see what the Japanese yen is actually doing while trading against the US dollar on the spot. So looking at the Japanese yen, we can see that with the buyers, with the sellers, with the changing buyers, with the changing sellers, then with the total. So let's have a look at it. So if even a look at it from the first week of December, we're 23,000 buyers, and then we had 89,000 sellers. So right now we're standing at 15,000 buyers and 72,000 sellers. And the total, if you can just look at it, the total actually we went all the way from having like 20,000 on the total. We are now sitting at 56,000. That's a benefit of around 36,000. So basically this to show that Japanese yen actually it's actually much more weaker. And if you can look at it here on the previous 3 weeks, we can see that we had 53,000, we're now at 56,000 with buyers being added and some sellers actually getting closed. So basically, if you can just look at this by just concluding with this report, you can conclude from 20,000 to 56,000 that Japanese yen is actually using some power. So that move going to the upside is actually well much expected, and we can actually take the buyers and just continue with it, as it's gonna be a very nice buy continuing going to the upside and actually giving us that. Once it actually can break above this, and then we know that we're gonna move into the major resistance area that we actually have on the weekly time frame. Okay, so that was just all. Right now what we're gonna be doing, I'm gonna see you guys on the next one. This was Dollar here. You guys enjoy your weekend. Have a nice trading week. On the following week, I'm always giving you guys the signals. If you want to actually understand how to trade like an institutional trader, just follow and subscribe my channel. Share the link with your most traders, the traders that I actually trade with. Share the link with them so that they can actually get beneficial knowledge when it comes to trading, and also some weekly analysis, of which I'm always doing the weekly analysis. So guys, don't forget to actually subscribe and like the YouTube channel. See you guys on the next one.